Hello, everyone. This is Stock Market Daily. Thank you for joining me today. It is April 11th, 2023. As always, this is not financial advice. Please don't copy my trading strategies because you will lose money. This is only for educational purposes. If you're new here and you like the content, please consider subscribing. I do these videos every single day. So let's take a look at the SPX chart here. You could see that in the morning we had a nice little pop on the opening candle here and a sell-off, and we just kind of basically it looked like we may have wanted to go down, but I'll show you the rest of the charts here in a second. But at the same time, we were kind of bullish. I mean, the big green candles compared to the smaller red candles in the morning, it seemed like we wanted to go up, even though we're making a lower low every single time here. I did not get that feeling when I was placing my trades. So we hit a low of 4,002. So that was our low, 4,002, 4,003. And from that point on, we started building up for the entire day. Interestingly enough, we built up the entire day just to break it all down and come back to the opening candles here. So we're pretty much unchanged for the day. In fact, we've only changed 0.17, so 0%. And this is partly probably due because of the CPI data that's coming out tomorrow. Everybody's going to be looking at it. Anybody who made money here during the day decided to sell off what they accumulated or made a profit on and sold off. So it kind of makes sense. And on days like today, I take that into account. And I have been wrong before, but I do I do place my trades around the fact that thinking that the opening candle for the most part is going to be close within 10 points of the closing candle or so. 10, maybe at the most 15. That's kind of my rationale. So let's take a look at the trades for today. Give me 1 second. Okay, there it is. So not all the trades are here anymore because I had to get out of a few. Let's take a look at the put side first, as always. So I did open up a 4,100 put. I did 2 of those contracts. And man, was premium low today. So this was like 32 or 30 delta, and I've only collected $390 per contract. It's missing here because, well, at 2 o'clock, I saw that we ran up pretty good amount, and I placed I bought them back for $15 each. The reason, even though it looked like on the chart like we're not going to go down, but that goes back to my original statement that I do think that with CPI data tomorrow, that people are going to be a little cautious. And if we're building up the day today like we did, there's a good chance that we're going to take a leg lower. I did not expect this. In fact, I said to myself, bummer, lost 30 bucks. Each contract's 15, so 30 bucks. There's really no reason to do it. But at the same time, when if this would have started happening earlier, like probably maybe even over here, because I kind of wanted to, if this started happening earlier, even though if we never reached that level, you're sitting there and thinking, okay, it's a very good possibility that we could reach 4,100, and you see this option price start rising. And when you see that, it's like, okay, well, I'm going to either let it do its thing until the end of the day, or am I going to just close out the contract while it's $30, $40, $50, $60, and then it just keeps going up, right? And that's exactly, even though we were far away from 4,100, that's exactly what happened. This option ended up being $50 when we started taking that large leg lower, even though it was very highly unlikely that we were going to reach 4,100. But the option premium starting to build. And as a trader, your mentality is, well, I better get out of this before I'm going to be, paying more for it later. So I'm glad that I ended up buying it at 15. I definitely could have bought it back at less, But on days like today, with a lot of data coming out tomorrow, with a huge move expected tomorrow, I don't mind spending a little bit of money on that. So, okay, the next option is 4085. And this one I left alone. I didn't buy it back, obviously, let it expire worthless. If we look at the calls, so first on the calls, we had the 4120 that was rolled from yesterday. So I rolled the 4120 from yesterday, collected a bit of premium for that roll. And today I ended up buying it back for $35 each contract. And there's two of them. So I bought them back for $35. Now, I only did that obviously when we started taking a leg lower. It started getting lower price and lower price. I was happy to see that, and I pulled the trigger when it was actually 40, and then I canceled it and I lowered to 35, and I was going to cancel it, but it already got filled pretty fast. The other two contracts are the 4125, and I collected $350 for that one. And let it expire worthless. And the next contract is 4130, and I did two of those, and I collected $250 per contract here, and obviously let it expire worthless. Here are the trades that I just was talking about, and that is all. So tomorrow we have CPI data, and you could already see the volatility increase as we were taking this leg lower. The volatility started growing, and the volatility tomorrow is going to probably be again this. It's probably going to be. It's we start at the market open, it's probably going to go away. So it's going to be a little tricky just to figure out how the market takes the CPI data. I know it's going to come out pre-market. However, a lot of things can happen within the first hour of trading. At first it might seem like we took the news positively and continue the trend up, or kind of just being stable, or we could take the news negatively and continue the trend downward for the first hour, but then it could be a completely different picture. And don't forget that we have earnings and we have more data the rest of the week. So hopefully the premium is going to start going up from here, especially with earnings starting. One other thing I do want to take a look at really quick. There is that trade that I took last week on Tuesday that was a month out. So this was a little credit spread. Let me get more strike prices on here. So 1 second. So this was a credit spread, and I collected 1,000, and let's see, I collected $1,087 on that option, and now it's worth 600 and let's say $40 or $50. So a nice little, we have a P&L of 441. I'm gonna let it do its thing. I'm gonna let it, decay a little more, and I'm probably going to open another one of these. I kind of like these trades. They're far out of the money. They require not much collateral or margin, and you don't really have to do anything. Just obviously, if the market starts ripping, you might have to do something then. But I highly doubt that we're gonna go up to 43.50. Just something to keep in mind. A lot of the companies last quarter guided down for this next quarter. So the fact that we're kind of, at 4,100 and going up all day today like we did today is a little bit surprising. People are kind of ignoring, the what a lot of these companies have already told the investors. But they're hoping that, that we're going to pause the rates maybe. So we'll see what happens. I mean, it's interesting to see that a lot of companies guided down. We're still at these levels. Either the market wants to at some point rip up if we're going to pause with the rate increases and the earnings are going to come in very good, or it's going to be a huge leg down. But we'll get there when we get there. And tomorrow is going to be our first indicator what's going to happen with the Fed. So thank you guys for watching. We'll see you tomorrow. And like I mentioned before, if you're new here, please consider subscribing if you like the content. Thanks. Bye-bye.